What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. We use technical analysis to get a good idea as to where the market might be heading next. In today's video, I'm going to talk about the possibility for the Dow Jones to go to 32,000. That would be the next target. I'm going to show you some technical pattern that I noticed and I just want to bring to your attention. Doesn't mean that it's going to happen, but I want to point it out. All right? This is the second episode today. In the one that I launched in the morning, I put out some trading ideas, so I'm going to recover some of those trading ideas and bring in a little bit more because, well, they actually played out pretty decent for the most part. I just want to follow up on that. I'll do that at the end. And then, I want to keep this video somewhat quick, so let's just go ahead and get right into it. All right, welcome back. We're going to start off going through the indices, and then we're going to go into the Dow Jones shortly after the S&P 500. Then the NASDAQ, then some indicators, and then we're going to talk about commodities and then go to the trading ideas. We'll start with the S&P 500. Look, people have been wondering, I thought it was going to fall down more, okay? Well, there's two targets that we mapped out, right? So on the previous market briefs, we talked about the 50-period moving average on the daily time frame, and then we also talked about this box down here. I didn't put it down on this specific list, but that was the one if it were to continue to fall, that's where I'd be looking to heavier load up. We tagged the 50-period moving average darn near perfectly. And what do we see happening? Well, we saw a bounce right back up. We saw more strength today from a gap, ramp, and then it kind of just hung out here. It went above this horizontal line, which was resistance, and then got rejected and came back down. So we're seeing strength at the 50-period moving average. This trend line now is technically still intact. It did get tested here. And we're back above the 5 EMA and the 20-period moving average. That so far says to me that the bullish move still stays intact. If we start closing above this line, this 38.25, 38.50 kind of range right there, I don't see why we couldn't go test 4,000. This does somewhat play the script to seasonality, but typically in February we see more of a down, more of a pullback, but this was pretty aggressive for the most part, a short period, and that's not to say that this can't continue. One of our indicators, the XLU, the beta rotation indicator, does show that it's still a risk-off environment at this particular point in time, and we'll get into that in other episodes. The price percent oscillator did tick up a little bit here. It's still above 0, so maybe we might start crossing back over and head higher, but it's still really the ball's in anybody's court. We have been talking about this specific indicator, the BP, bullish percent index, and when RSI got really oversold, and we said, hey, when it gets over here, look for a bounce. Right, that's right when the very first day that it came into that, actually at the moment it crossed into that, we started saying, hey, now we got to start looking for somewhat of a bounce. On the 30-minute time frame, you can see right here a little bit more closer, big gap up, then we ramped, and then on the market brief that I did earlier today, I said start looking at this gap fill right here in this area, this 384 to 385 as a level of resistance to potentially head short. Okay, why did I say that? Well, because we were gapping up. That was what the futures market was showing us. And then we ramped and we said, if it comes up here on an aggressive move, it makes sense because I was thinking that the RSI would get overbought. All right. And then we got that sell off in the last 30-minute candle. You could see some movement to the downside. And I want to call out here, I mean, we've been putting in lower lows and technically a lower high right here, a little bit higher than this one, but still from this point, it's a lower high, lower lows. So it is still trending down. And this is a very aggressive move to the upside. So it's going to be interesting to see how the futures market handles this. Or if we're just going to gap right above these levels and continue moving. And like I said, we'll get into the Dow Jones right now as to why that it's very possible to see the Dow Jones easily go attack 32,000. We're going to first look at the daily time frame. We recaptured, as you can see, we came down. This is very similar to look to the S&P 500. We broke down through this trend line. Little fake out right here, boom, right back up. We're still below the 20-period moving average, and we still have some resistance up ahead at 31,250. We see the price percent oscillator. The black line did tick up just a little bit, so it didn't quite cross below 0, and we're starting to see the histogram move up just a little bit here too. Are we going to get above the 20-period moving average? It's very possible. I would say yes, with almost certainty that we're going to at least test it again tomorrow, just because we had this big red day and then a couple of days of just a lot of strength coming right back in, which suggests to me that, this was just a very temporary thing until further notice. Now, this does not mean to me that a big pullback can still not happen. I still think structurally speaking, there are a lot of interesting, to say the least, things that a rug could easily get pulled out from underneath us. But from a perspective kind of zooming out on the weekly time frame, monthly time frame, and so forth, we're not getting confirmation on these monthly hanging man candles as of yet. And in the shorter term, we're still seeing, bullish strength. Now, why do I think it's going to go to 32,000? Well, that is simply put right here. This is the Coco dog pattern. You have the two little legs and the little head. I'm only kidding. That's not the reason why. But what I want to call out here on the hourly time frame, you can look at the 30-minute time frame, you can look at the daily time frame, etc. But it's this pattern right here. This is a descending broadening wedge pattern. And I'll show you what this looks like as far as a breakout perspective. It has not broken out yet. So I'm calling for 32,000. If it were to break out, it would make sense to me, and I'll show you here more closely in a second. But just know you have lower highs being built, lower lows being built, but notice how the wedge is widening. So if we start breaking above this, that would be considered a breakout of this descending wedge. And, these can go either way. Obviously, clearly they can go either way, but I've seen plenty of times where descending broadening wedges, they actually break out to the upside. And right now we're right up at that level of resistance. Now, let's zoom in, and I want to show you what that looks like from price action perspective. Well, here is just an example of what a broadening wedge, descending broadening wedge, looks like, where you have the price action going up into it and then ping-ponging around. So we have the price action going up, then we have it ping-ponging around. Now, how do you find a price objective? Now, this is just a rule of thumb, if you want to call it that. This is just to give you an idea of how far it can go. I love doing these price objectives on bull flags too. You can just measure the length of the pull on the breakout, and it works really well. So here what we're doing is we're measuring the top portion of the first kind of tag of this broadening wedge pattern, and then we're measuring it to the bottom portion of the broadening wedge pattern, the most recent bottom, which is right here. So if you see that white dash line across to the white dash line in the bottom, that creates this right here, this green line. So that's the length. So all I did was take that and measure it from the breakout portion. Now, it hasn't broken out yet, but if the futures market pushes over, boom, that could break it out. Now, it doesn't mean it goes in a straight line. It could take a while to get there, but that would be the target. And based off of that, that would bring us right up to around 320 on the DIA, which is up 32,000 just about there on the Dow Jones Industrial Average. All right, so that is one of the reasons why, I just wanted to call it out. Doesn't, once again, mean that it's going to happen, but, you could just look at this. You can look at the pattern. We've seen patterns like this previous play out. I've seen patterns like this. So it's just a quick way of kind of finding out an idea as to where the price action may potentially go. And it's said by actually multiple different analysts that we can still see continuations and melt-ups for this euphoric kind of speculation to consider. And when we've been looking at stocks like GME, BB, and all these things, and you see, everyone, like I was at my parents' house the other day and they started talking about, hey, have you heard the thing about GME stock? I'm like, oh boy, everyone's talking about GME. My wife came home from work and she said all of her friends and clients were talking about, GME stock. I'm like, okay, so clearly it's speculation. And that's, just the day before I put out a warning on the TikTok saying, don't play with these. And everyone hated me for it. They probably don't hate me if they listen to me, but yeah, that's besides the point. I forgot where I was going. I was going on a tangent, but let's look at the BPI NDU. This is the bullish percent index for the Dow Jones. And another, call out right here is we went to oversold right here. We tagged 30 barely, right? And now we're starting to kind of move up a little bit. So we have a lot of room to go if this wants to continue to run higher. And then we look at the transports. This is the weekly time frame, 20-period moving average. Why am I looking at the transports? Well, it's Dow theory, right? You got to look at transports. You got to look at the industrials. They go hand in hand. One can't really do well without the other. Okay, if you're creating and manufacturing, you need the transports, for these products and so forth to be transported, throughout the United States, throughout the world, whatever the case may be. So we came down here into the 20-period simple moving average, and we're starting to bounce from that level. So this 20-period weekly moving average may be a signal that it's going to act as some support. All right, so far, that's what it's doing. Is it going to continue? I don't know, but that is why I'm just building out the bullish case for Dow Jones 32,000. Now let's look at the NASDAQ. NASDAQ has been in a pretty strong channel. However, NASDAQ right now is testing once again very quickly the upper range of the channel. So we came outside of it, we got rejected, tagged the bottom level of it, we're right back up to the top, above the 20-period moving average, above the 5 EMA. We have the price percent oscillator kind of pointing up like it's going to start crossing over. I personally wouldn't be going long right here because I would want to see kind of what takes place exactly here in the next couple of days. Be it that it's at the very top of the channel, maybe we consolidate sideways, maybe we come back down to this lower portion of the channel and then head higher. It's just too hard to say at this particular point in time. Now let's look at some indicators. First off, pretty decent day in the markets, but breadth, once again, negative, not good at all, minus 0.013. That's the NYSE-McClellan oscillator. So, it's just not impressive breadth so far. Are we going to see a big burst of energy? Maybe. Or are we going to see, more of a pullback back down to here? Like we've seen that here. We called it out, right? We said, okay, that's actually an overextended move. Now we can see a bounce. Well, we're seeing the bounce. So maybe we get an aggressive burst to the upside. And that could be a potential overextended move where we can potentially head short into it. But, it's like I said, just too early to tell. When we look at the VIX, we did call out this big green pull to the upside. We said, hey, it's probably a good time to start looking for long positions. Well, 4 trading days later, we're back down to 25, which is still relatively pretty darn high. Okay, but we're falling fast here. Back into this kind of channel that it broke out. We're back testing it right now. I don't know where it's going to go, obviously, but 2250 does sound like a pretty good area where we can probably find a little bit of support. And, or might continue to drift a little bit lower. I've been saying that this box right here would make sense to me, or even potentially fill in this gap, but that's quite some ways away. Overall, though, the VIX is still relatively high. So you got to be, at these levels, you just need to be very aware and very tactical and, eyes wide open while you're approaching the markets. Here's the sell signal. The sell signal, not giving us anything. Still, market's complacent, very bullish. Nothing's going to go wrong here, right? Even though that we had a pretty aggressive, selling into February. Now it's, that's nothing to worry about. We're still really bullish. We're going to wait for this black line to cross above the red line, and then we'll start talking about that a little bit more. Let's look at commodities really quick. Horrible day for gold, horrible day for silver. This looks like a bear flag to me. We have the blue line, which is the 50-period moving average, just about to cross under the 200-period moving average. We've been talking about that actually back over here where that was a possibility, and that is known as a quote-unquote death cross. That could mean that the larger trend is going to continue heading down. I don't know if that's actually going to hold bad for a long period of time, but I will get into actually, I forgot to bring the dollar chart up here today. Bummer. You know what? I'll talk about the dollar in the conclusion section, actually, and we can briefly discuss that. First off, let's look at silver. Silver got pushed really high, tested 30.50, all that speculation around Wall Street bets. But what I posted on Twitter was on the day that this went up so high, all my minor positions just jacked through the roof. It was like 20, 30, 40, 50% gains in some of my miners, 100% gain in some of my miners. So I sold half of my position in all of them because what happens is when things move too fast, too quick, too fast, or too high, too fast, or whatever the saying is, you need to be able to liquidate that position. You can't just sit there and be like, well, maybe it's going to go higher. Maybe it will, but maybe you'll just end up having a big down day like this. So I got to capture a lot of profits up in this area. Now, because I did that, I can now look for re-entry at specific levels on my miners. So I'm going to let this one take a breath, right? We're coming into the 50% retracement level. Maybe we come down and test this. I'm going to give it a little bit of time here to see what it wants to do next before, making any more moves in the miners for right now. Here's WTIC. This is a commodity that we should all be paying attention to. I posted a while ago on Twitter a monthly time frame saying there's no reason why this can't hit 75 this year because of how it was positioned, how it looked on the charts. Well, we just recently broke out of a period of consolidation here. You can see from 2021, just January 11th, 2021, early January, just trending sideways here. We recently broke out of that area of resistance. Blah, that's what I'm trying to say. So we broke out of 54. We're at 54.76 right now. MACD does look like it's crossing up to head higher, moving slightly into the overbought territory. That doesn't necessarily mean anything bad though. So it's always good to look at some energy stocks while you play this because this right here is the black gold. This is the commodity that has been trending up, very bullish looking. So a lot of eyes are on that. Here's Bitcoin. Bitcoin, I just wanted to call out. We did break out, so this could be something that can take us a lot higher. A lot of people were tracking this ascending triangle or descending triangle or even symmetrical triangle, just however you want to draw it out. But it does look like it's breaking through. So we're going to look at the top of this candle, which is 38,500, 38,200, right around there. If we get above that, there's no reason why we can't start heading higher and even potentially break out of 42,000, which would be nuts. Now, before I just get into the trading ideas, I'll talk about the dollar now. So everyone's been talking about the dollar. The dollar's moving up, it's breaking out, but the market isn't responding. So this tells me something, and it should tell everybody something. First off, what it tells me right now is it could be very temporary. So it could be a complete fake out move. Like people are drawing inverse head and shoulders, people are drawing wedges, and I get that because those are bullish type patterns for the dollar, and the dollar can go higher, but the market isn't responding. And that means one of two things, right? The market says that is not a real move, I'm fine within equities, or two, it just hasn't hit reality yet. And that's also could be very, very, real. So yeah, we're seeing some moves in the dollar, but we're also seeing the stock market move higher too. My main kind of idea for resistance on the dollar, if we start breaking above it, then we'll start seeing more pressure, is actually more towards 92 on the US dollar index, the DXY or the USD, whatever stock platform you're looking at. So I'm looking at 92. If it comes into that area and breaks above it, then okay, I would imagine that we can start seeing something take place. But as we see it right now, the dollar's been just kind of going up a little bit. It hasn't been like that solid of a breakout. It just hasn't to me. But we are starting to see some strength come in, and it has to be noted because that is very important. Is it a long-term change? No, we're still swimming up a river right now with the dollar, okay? So let's get into some trading ideas. First off, ticker symbol MVIS. I did already call this one out, but I want to say, yeah, we're up 3.46% today. Awesome, but we still haven't broke above this line here, this horizontal area of support, which is right around $8.50. If we do start breaking above that, we probably see this MACD crossover, like a bullish crossover, and I would say that shorts might be forced to cover. This is a shorted stock, highly shorted stock, so that's a good thing when you have short sellers in the market because it provides constant liquidity in the market, okay? And it gives also guaranteed buyers. You need people to buy back their shares if they want to exit the position, which can help drive the price up. Or even if the stock market was falling down, you see these bounces right here. Well, these bounces could be driven also by short sellers because they make money on the way down and then they buy back their position. You see the bounce move up. So, it's always funny when people say, those evil short sellers, right? Those evil people. And I'm not saying that there aren't evil short sellers, but what I am saying is they do supply a lot of liquidity into the market. And it's a good thing too because you do have a lot of companies that actually are just not overall good companies, or they have poor business practices, or they treat employees poorly, or various other reasons, or they have flawed products, or whatever the case is, like Enron, for example. People can short those companies. There are hedge funds that short and find those specific type of companies that they can short because they know that they'll be going bust eventually anyway. So, all right, let's keep on continuing down. This is ticker symbol ROAD. Nice big volume bar came in today. No price action really, up 2.37%. So I wanted to call that out. This makes me think, what's going on right here? Yeah, people said, oh, it's earnings. There's a lot of selling going on. Yep, that's true. Obviously, a lot of selling going on. But what I like about this is, first off, it just goes to show you that, it's kind of finding a little bit of a bottom here potentially because we've been selling off. And now we're starting to look at this 50-period moving average as a strong area of support. Now, it's been tested multiple days, so it could easily break down. But what I like about it is I can just have a stop loss below $28, okay, and then enter in right at the 50-period moving average. Now, if we start getting above 30, that could very well send us higher. We've seen a break through 30 right here and a big boom to the upside. So potentially, we might be able to move higher. The histogram right here is starting to kind of head curl itself there. And we're overall in bullish context. We have the 20 period sloping up, the 50 period, and the 200 sloping up. So overall, I just like this setup. So I entered into a very small position. I've been trading very lightly. And just so you know, I typically post all my positions on Twitter, and I do it just before I enter. So if you're watching me on Twitter, you can see me go live right there, and I just say, hey, I'm going to enter into this position. Then I screenshot my order. This one I did like 50 shares. So like nothing. All right, here's ticker symbol SOLO. I actually posted this one on my earlier trading video too. A little bit of an update, right? 4.71%. So if you entered in when you saw this, when I posted it pre-market, congratulations, you got a little bit of money there. I really like this setup. So I'm not in this one yet, but I do think that I will be getting into it. I may just speculate, and then if it does break out, I might buy in more, but I haven't fully decided yet. Now, this is a heavily shorted stock, so you can get burned. So the best way not to get burned is to wait for confirmation, and then you have a stop loss right below the breakout point, and then you hope that the momentum and the short covers, the momentum traders had the buy, then you have the short covers covering, so you're going to catch a nice move to the upside. That is, the more safest way to play things like this. Unless, you're like, I don't care, I'm just going to speculate, buy some shares here. Just know that, look at the y-axis. This thing moves large percentage points in a single day. Like this move, this little tiny move right here was 4.71%. So imagine if it hits the lower end of this trend line, that would be, over a 10 to 12% drop right there. So it's pretty aggressive. Here's LXRX. I did enter into this position as well, up 9.92%. I had a 200 share position, trimmed it down to 100 shares because, well, it was up dang near 9%. So I want to take my profits. If it starts continuing to break above 950 here, that is a really good sign. It's a nice bull pennant. We've seen that happen before. So it'd be nice to see some more volume come in and this thing really start to take off. But other than that, I did capture some gains, and I'll just have a stop loss below this trend line now. Here's CSWC. I don't think I posted this on the early morning video, but I did throw this out on Twitter too. It was trending nicely to the side. Party starter scan picked it up. Nice volume. You can see that big bar of volume. MACD is starting to curl up right here. So we're kind of breaking out of this. It was only up 2.34%, so we're still early in the game on this. I drew it diagonally, but you can draw this horizontally too, and it shows just a very it just broke out right now, just recently in bull context. So I do like this trade, and I have I believe a small position in this as well, 100 shares or 200 shares. Then the last one is CPE. I posted this a while ago, but now it took a little bit of a breather. This is traded on the NYSE, ticker symbol CPE. Sorry, once again, looks like a cup and handle. We've been in this handle formation, trading back and forth between 17 and 13, $12.50. So it's also a very, it's a high beta stock. It's volatile. You got to look at the y-axis, right? It goes 13 to 14, a very small little move right here, okay? So a little small move, if you're buying 100 shares, a little small move can move $100 very quickly. All right, so you got to be very careful, manage your risk. You don't need to do large positions on high beta stocks. You can do lower dollar amounts, and you can potentially get bigger moves. Me personally, I do lower amount of shares, lower dollar amount trades on high beta, just because I can wake up tomorrow and it could be down to $10, right? So, or I can wake up tomorrow and it could be up to $28. But just know that, with more volatility, it means more risk. More risk also can bring potential more reward. All right. So yeah, that's all I got for you on today's daily stock market brief. I kind of went over some trading ideas, why I think the Dow Jones can easily go tag 32,000 as its next target if that descending broadening wedge does want to pick up pace. The dollar, keep a close eye on the dollar. Sorry I didn't bring in the chart, I kind of forgot, but I did do it on my earlier video today. We are seeing strength, but like I said, we still got resistance over 92, so nothing's really yet been quite confirmed, despite what many analysts are already saying. I just don't buy it yet. Okay, I'm not buying it yet, but that doesn't mean that it's not the early stages and they're all wrong. It doesn't mean that anybody's wrong. It just means that I just don't believe it yet. That's really all it means. So take it for what you want, everybody. Take it for what you want. This is not financial advice. This is just my opinion, and my opinion only, and probably some other people's opinions, but they're not here talking. I'm just rambling on. All right, everybody, I'll see you later on the next video.